When investors want to share with us this huge opportunity investing in sustainable economies and stocks, they need to understand that you do not need to sacrifice returns for having a sustainable portfolio containing of many assets or companies that provide those solutions. So that is the first step that an investor should think of. There's no need to give away performance. Secondly, when you build a portfolio like that, what you do not want, and be careful for that, of greenwashing. So you really need to understand the portfolio manager that you choose, what are the proof of their stocks that they buy. And so at Impax, we've been for many, many years looking at companies, what is the percentage of revenues coming up with these environmental solutions. And then we build a portfolio, and what we do at the end of once a year, we take the end snap of that portfolio, we measure all the CO2 emissions, and we look at the CO2 avoidance of all the stocks. And there is a net CO2 avoidance possible across the portfolio. So that's a good result to show to investors, listen, you're so much better than a plain vanilla equity portfolio. Secondly, we do engage a lot with companies on the sustainability plans, because it's not only what the company does and provides, service and products, but also how do you behave? Because you can make a very good water filter system, but if you, let's say, use child labor to do that, you're not very much a sustainable company. So what you do and how you do it. And that also means that we can measure across the portfolio how much water is treated and saved and provided by these companies, how much renewable energy is generated by the companies in the portfolio, and how much material is recycled, reused, or waste avoided across the portfolio. So that is definitely important. That means that you have a real sustainable portfolio. And then lastly, of course, it's important, and an interesting investment theme doesn't mean it's an interesting investment, so i.e. you make a return out of it. So we are, as a professionals, looking at all these opportunities and pick the ones where we think you can make a return out of it. And that is the 360, I would say, from sustainability, valuation, engagement, and risk-adjusted returns that you do not need to sacrifice for. The characteristics for the portfolio overall is very much that we look for quality underlying earnings growth. That is very important. That doesn't mean that you don't have cyclical areas. We do, as you think that a lot of it is manufactured, so we have a lot of manufacturing exposure, industrial exposure. But what we do is we look at companies with high return on capital employed, where you have good, healthy margins, where the margins swing through an economic cycle is not boom-bust. So that is a very important starting point once you have a huge opportunity set of companies to invest in. Secondly, of course, we look at the quality of the management team. They all need to be good quality management teams, because if you have a strategic plan, how can you execute on that? So you need to be able to rely on management teams. You need to understand that the management team under-promises and over-delivers instead of the other way around. And thirdly, of course, very important within our selection, the criteria that you see across the portfolio is that our sustainability levels of E, S, and G, we have our internal scoring system, excellent, good, average and fair, that you get an above average sustainability across your companies. So what they do, strong return financials, quality management team, and strong environmental criteria and characteristics. Of course, not everything works well for us. We have investments, and that is a nice thing about investing in listed equities, because you make an investment decision, things can change. You might get disappointed with the management team. We had a recent example with that. So we exit a position because we don't rely on that management team anymore. That's one reason to exit a position. Secondly, an environmental story, think about LED lights, becoming more and more standard. So the growth rates are deteriorating. So you might think then, okay, that's an exit because we don't see the great opportunity that we had 10 years ago in that particular stock or sector, and we switch to another opportunity, the next one. And thirdly, of course, is just the economic cycle. You might have economic cycles that go against you. It could be higher interest rate, inflation pass on, or just balance sheet issues, stress. So there's several reasons why we exit a position. And also what we need to understand, of course, is that sometimes stocks go down very hard on sentiment reasons. And so we are very much important. We look at the downside review. If the stock is weak, is this worth an exit? Is it worth buying more? Or is it worth patience to sit through that? top 5 opportunities are building energy efficiency. All the technologies are available to you. So we have companies, and they have seen huge opportunities, order books filling up with energy efficient heating, ventilation, air conditioning, and heat pumps. Heat pumps are really sort of the new technology, the more efficient technology. So that is definitely one. The second one is natural ingredients for food. That will not stop. You will continue to see that people want to eat healthier. We want to have better food that is easier to break down by the environment. Thirdly, of course, water quality. Every day, everywhere, in each economic activity, we use a lot of drinking water. As human beings, what we want is to have safe and reliable drinking water, so we can invest in testing and measuring and treating of that water. So that's the third one. And the fourth one, of course, is the electrification. We don't need to invest in the OEMs, but you can invest in companies that provide charging stations, connectors, cables for electric vehicles. And the last one I would say is that digital infrastructure. We all live in a digital era, so the growth will continue in becoming more efficient with your energy. That would mean that we have to share data, i.e. cloud computing, efficient data centers and all of that. So you can see there's a very diverse set of opportunities, and I've just given you 5.